Hi, and welcome to Symax Fintech weekly overview. First of all, our disclaimer, trading obviously involves the potential risk of loss of capital. It's not suitable for everyone, or hopefully it is for you. And as many companies provide leverage, just be aware that you can lose substantially more than your initial investment. All the views that we provide here, opinions, is just purely for educational purposes. We're not trying to encourage you in any way to trade or invest. And of course, just be careful and consider the risks involved, your financial situation, your level of experience, and your risk appetite. And of course, only risk capital that you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you start risking your capital. So highlights of last week, the FOMC minutes came out, warning of continued impending rate increases. The next ones they're expecting to be 50 points and 50 basis points, the one after that as well. They could carry on being aggressive, but if the economy starts to turn, if inflation starts to cool slightly because demand drops, they may have to rethink that, but we're just going to have to wait and see. And of course, the ECB expect to start raising rates from July, probably 25 basis points, but it could be 50. To be honest, personally, I don't think 50 is on the cards. I think it would be too much for them. They're just not used to moving in big increments. So, but we have to be prepared for surprises. Musk is changing his financing to purchase Twitter. He did sort of put it on pause, but it's going to mean that he needs to raise more cash. He doesn't want to tie up all of his stock by leveraging it against borrowing the money, against buying Twitter. And of course, we've seen the stock prices up and down quite aggressively recently. Bitcoin is now sort of pretty much disconnected from stocks at the moment. We did have that sort of time over the last 2-3 months, I would say, maybe longer, where they were sort of in tandem with each other, tracking each other. But Bitcoin seems this week, it's just sort of stayed down while the stocks have recovered. So again, just wait, take that easy, pretty much all correlations are, that's what they are. They're correlated, but they're not always perfect, unless you're doing sort of bond yields and such like. But, again, just sort of keep an eye on it. Dollar weakened, some profit taking, and of course, although we're expecting all these rate rises from the US, their economy is just looking just that fraction softer. Of course, this Friday, we've got the NFP coming out, so that's going to give us more of a indicator of where their economy really is. But stocks bounced last week. Oil and gold rallied as well. And social media stocks had a bad week. At one stage, they was down 135 billion from their market valuations on Tuesday. China's providing tax relief to try and boost their economy. They're going in the opposite direction at the moment to pretty much the rest of the world. And UK windfall tax on energy companies to pay to try and cushion the blow of the public that's having to pay massive additional energy costs through their electricity and such like. PMI data was lower last week. Again, just makes you sort of revise things just slightly. And China's growth is probably going to end this year behind the US, and it'll be the first year it's done that since 1976. So key data this coming week from the EU, we've got CPI, consumer data, we've got retail sales, PMI, manufacturing. Again, it's going to prepare us and give us more insight into potentially what the ECB is going to be thinking and how they're going to plan for any rate rises on the cards. For the US, again, PMIs coming out, consumer data. On Wednesday, we're going to have ADP, which does give you a little bit of an insight into what the NFP data is going to be, but it does exclude sort of government hirings and firings. So, just sometimes it can be really close, other times it can be really wide apart. So just keep yourself open-minded to that. For the NFP, I would say, focus much more on the earnings and the unemployment rate, which is expected back to pre-COVID levels of 3.5%. And of course, earnings is going to be an inflationary factor. UK, we've got PMI out this week. There's not much else to come. And in Asia, PMI and inflation data as well. So the macro outlook hasn't really changed too much. Inflation's still there, shrinkflation is still there. The potential for stagflation and recessions is on the cards as well. Supply chain issues remain. China's still in their lockdowns. They're still seeing more and more COVID cases. And of course, Russia's invasion of Ukraine is still ongoing. Of course, all of that is creating a shortage of energy and increase in energy prices and food prices as well. Still that lack of workers, although, some of those that are maybe just looking at their asset valuations may be tempted back into the marketplace soon with stocks lower, the pension valuations lower, etc. They may need to start to look at perhaps entering the job market, even though they've been trying not to. Rate rises just remain pretty much everywhere, except for Russia, China, and one or two other countries. And that chance of a recession or stagflation in the not too distant future is still on the cards. For me, I don't believe it will happen before 2023. But if central banks are too aggressive with their rate rises and obviously inflation stays high, then I just can't see anything else but just remember, this is my personal views. So I like to add a trading tip of the week. So this week, when you're trading, rather than just going all in, just jumping in, try and perhaps sort of break your volume down, however you're trading, into three pieces. So what I tend to do is I look for the perfect level, the best level I think I can get, just in front of a support or a resistance line, maybe a pivot point. And then what I do then is I work out how far away from that level I want to add my entry level. And then I've got the mid-level in between that. The idea is just to get a better average if the market's going to give me that. The idea of not leaving everything at the best level is the fact that the market might get rejected early, and then I've had a missed opportunity. And this way, at least I could get something on. And then maybe I'll add to that depending on how strong my sentiment for the market is. And of course, it's possible to exit the same way to maximize profit. So you can take your position off bit by bit. You don't have to have this all or nothing situation. And of course, it's great when you're on side to lock something in for sure. You can use averaging to calculate your stop loss. Or you can treat each trade as a separate trade. So you end up with 3 stop losses instead of the 1, or just use that average. The important thing is just to make sure that it's affordable, make sure that you're not increasing that stop loss because of the way you're gauging this. It should always come back to the same as if you just did it as a normal trade. We're now moving on to technical analysis, just my usual sort of analysis of a few contracts just to try and give you some insight into what I've seen. Hopefully it helps you this week. So we're starting off with the Dow Jones. What we're seeing is, Dow Jones, what is it? It's the top industrial stocks. And stocks, after just failing to confirm a bear trend, have now turned and have enjoyed quite a good positive week, as you can see from those green candles towards the front there. And of course, that's, hopefully that's going to continue. People will be looking for it. There is a bounce at the moment, but is it going to be one of those dead cat bounces where it turns and tests the lows again? So as you can see, I've put some support and resistance lines on. Trend lines are there, and then the lines that sort of cut through them, they dissect those. It's just to give you the value, the price of on Monday, where that support and resistance is. This is the Dow 30 minutes. So I've got this slight up channel at the moment. And again, I've put those in. I've identified one more support level. And then, as I said, I'm just dissecting where those lines come up to give you the actual numbers so that you can give you more of an idea of where they are rather than having to guess. The S&P daily, pretty much all the stock markets are looking very similar, but maybe one exception, which I'll come up to next. But so the S&P had a strong week as well, good recovery for that. And as you can see, I've sort of got those two. It's still that sort of short-term downtrend. Don't think it's a long-term downtrend because that trend's been going for sort of over 10 years. But just looking at this much shorter term, we're in that down channel, but it could come back up and test. It's got to get through that next resistance level first, though, which does coincide actually with the top resistance line coming down there. So they're both pretty much the same price. So on the 30-minute, we're seeing sort of a similar thing. All we've got here is where the markets are just sort of playing out again in bullish, but on the S&P here, it looks as though it's due for a breakout one way or the other on Monday. And then we've got the lower support and higher resistance levels there for when it does break out. The Nasdaq, it has recovered. It's only just starting to sort of pick up. It hasn't been quite as strong as the other indices. It still had one negative day for the week, but it is looking more positive. Whether it can get up to test that resistance level, I'm not so sure, but we'll have to wait and see how this week goes. It's going to be Friday that's going to be obviously the key thing for what's going on here. And there's two levels close together there, which obviously you're not going to see the one underneath. So the one underneath is 14,295, which is just under the 14,365. So one of them is sort of like those triple tops going across. The other one is where it's dissecting that downtrend line. This is the 30-minute here. I've got a slight uptrend that I've managed to sort of build in. Again, it's going to be an interesting week. With the Russell, slightly different. The thing with the Russell is it's small and mid-cap companies. 2,000 stocks, and it is much more sensitive, shall we say, and in sort of tune with what's going on with consumer actions, because obviously it impacts their bottom line much quicker. But again, here just identified a few levels for you. And here it is on the 30-minute, it's in an uptrend there. They all pretty much tend to follow each other, just at different paces, but directional, very much similar most of the time. Of course, not all the time. Here we're going into the pound against the dollar cable. So here we've seen the sort of dollar weakening for a little while, for pretty much since the last FOMC, really, to be honest with you, which is quite regular for it to happen, because expectations have already been built in. But I would say that the US still has the strongest economy by far at the moment. Here's the cable on a 30-minute. Again, I identified some support and resistance levels there for you.